Welcome to the Amazon Legends podcast, where we have real stories about making it big on Amazon. Our guests are CEOs of large companies and entrepreneurs who became powerful sellers, also experts specializing in helping sellers, and both former and current Amazon employees who will give us an insight from behind the scenes. Here's your host, Nick Urison.
Welcome to another episode of Amazon Legends. My next guest today is a mechanical engineer by training, and he built 5 brands. Even though he's a mechanical engineer, he decided to build brands instead of machinery. So he built 5 brands on Amazon European marketplaces and discovered a new opportunity while doing this, especially for US sellers. And we're going to learn all about it later. This is frankly a business model I haven't heard, and I can see a lot of opportunities with it, but we'll get into it later. Today, he's the founder of SPACEGOATS, an enabler for selling in European marketplaces for US brands. And he's heavily into bodybuilding and strategy games when he's not working. So they don't usually go together, but I guess we'll also learn about that. So with that, everybody, meet my guest, Anton Herman. Welcome to the show, Anton. How are you?
Thanks for having me. What a beautiful introduction. I love it. Yeah, I'm always good. No worries about me. Looking forward to the stream.
Good. You know, I'm an engineer by training myself, so I identify with engineers, and engineers are they have a weird kind of mind because it tends to be creative, at the same time very methodical. So it's always looking for a solution for a problem. So you've obviously figured one out. So you are an expert in launching brands in European marketplaces, Amazon European marketplaces. So tell us the most important thing for brands to know before they launch on European marketplace.
As always in life, or in every area of the life, prioritize well. I guess it's the best tip you can get. And with this one, we can dig deeper.
So prioritizing. So one of my things is one of the most important traits of a leader, or I should say the responsibilities of a leader, is to set the right priorities for the organization. So so your case is, if you're going to launch, you need to prioritize the things that you need to do very well. So walk us through, what is the most important? What comes right at the top of the list?
We are talking about Europe, and you guys which are listening to the podcasts or video, watching the video, you basically coming from the States. And in the States, things are more easygoing regarding compliance. And in Europe, we take compliance super serious. And that's why the best marketing, the best product, the best whatever is nothing if you are not legally compliant. And that's why I would put the biggest focus, at least for the start, into the topic compliance in general, specifically product compliance and tax compliance.
So compliance, of course, compliance is an entity. You need to be registered for certain taxes and anything else, depending on the marketplace. But what you are really focused on as the most important is the product compliance.
Product compliance and everything around the what you explained, tax compliance and entity compliance, so to speak.
So tell us about the product compliance. So how does one go about getting those things?
So if you're talking about product compliance for American entities, for American sellers, we need to go one step before, because we have a regulation here in Europe and also in the UK, by the way, that every product which is sold on the European marketplace or European Union on market, not marketplace, market, needs to have a company liable for this product sitting in this region. So in the European Union means if you are an American entity and you want to sell your products to the European markets, you are not even allowed to do it by yourself. So that would be the first step. Find a company, a distributor, import of records, or whoever who allows you to put his address on the packaging or on the product, and guarantees in front of the European entities or European governments that this company is liable for the product. That would be the first step.
So that means that if something is wrong with the product and there's a complaint, the authorities have a local party to hold responsible and go after and put out of business, so to speak, right? So
exactly. Exactly. Yeah. Because I'm not sure if it's the same in the States, but in Europe it's like that. Even if you are producing your goods, for example, in China, the guy who is importing the goods on his name, so the European entity, is actually like the producer for the state. So you even if you are just private labeling, you're still, for the government, you're still the producer of the product.
So it is not very different, but probably the requirements are a lot more strict in Europe to pass that compliance test, so to speak. But in America, first of all, building an Amazon operation is no different than building a business. It's a business. Amazon expects you to take it seriously to build a business. So in America, when you have a company, you have employees, and you have an office space, even if you're working remote from your home, it's still, especially these days, it's become mainstream. So it's considered your place of business. There is something called commercial liability insurance, which protects the business in case of situations where the company gets in trouble. Like product claims is usually part of it. So what Amazon does to some sellers, first of all, you just sign up with Amazon. You sign up for the professional selling account, you pay your $39.95 a month, you are all set. But as you start to do serious business in America, Amazon will come back and say, okay, you need commercial liability insurance. So that's what it comes down to. But of course, who are they asking this to? They are asking it to the seller, which has registered the seller as an entity. If it's professional selling account, usually it's an LLC. So what you are telling us is people need to consider the same in Europe, because then the European authorities will want an entity, and the reason is if something is wrong, they're going to come after that entity. So
that's funny. Just to round it up, what you said, a nice explanation for difference between Europe and the States is as follows. In Europe, you need to have everything perfect or everything good up front, okay? But if something happens, it's not too bad. That's why you don't need, it's not obligatory to have a product insurance here, because the fines are not too bad, because they want everything up front and they check everything up front more. In the States, it's like that. So that was our experience. You can just go for it, and if something happens, then you're fine. So that's like the big difference. So here the fines are not too bad, but you need to put a lot of energy in the beginning, and in the States you can just start selling, and if something goes wrong, then you are way more trouble than in Europe.
Everything is magnanimous in the US, right? So everything is built for scale, and when they fail in scale. So it's true. But also in the US, the impact is far greater, because you have 300+ million people living here. Despite all the complaints people have, this is still the most, the richest country in the world and the wealthiest, blah, blah. So the per capita income is far greater than any other country. So as a result, your product ends up in the hands of a lot more people. And if something is wrong with it, now suddenly you've got many people being affected, and that's where the lawyers really prey on these situations, and then they have these class action suits and everything. So
that's the point. That's the point. You said it. Class actions. That's
Yeah.
something specific, special in USA. We don't have a similar thing here. At least in Germany, you don't have it at all. So everyone has to do his own claim, and you cannot gather as in the USA and do a class action. You have to go to court for yourself. And that's the big difference. And that's why the fines are not as high as in the States, because when you have like 100,000 people which are on the same payroll or class action, then you have, of course, more liability.
Tell us, how does one go about getting a company to be liable for them, and then what happens next?
So you have two options. Either you go with your own company, so you can set up your own entity as a subsidiary entity for an American company in the European Union. There are better countries, there are worse countries, especially tax-wise, and then you get your VAT number, and then you can operate as a fully integrated European Union company. That is the first option. Of course, more complicated because you're in the end liable for your product in the European Union with your European entity. First option. The second option is you find a partner which actually allows you to use their company on the packaging or on the product, which is liable to the government, which company is liable to the government, and therefore you would need to test the products really in depth, or the company which will be liable for the product will test it in depth, and of course will want a share of what's going on here. I just give you a rough idea. There are companies which are taking a yearly payment, for example, $1,000 per year, plus for each shipment which goes to the European Union, they take a cut of the import value. That's, for example, a system which is pretty common in Europe. And I forgot the third option is, I would say the easiest one for an American entity is if you actually find a distributor in the European Union which just distributes your products to the local stores, to FBA, to whatever, and they will actually buy your products in the USA, for example, or on the ship, and import the product in their name, and they will be also it's basically their problem if the company is successful, or if the product is successful or not. So they buy the products like in a normal deal. They buy 1,000 pieces, and if they sell it for 100 euro per piece, then they earn more. If they sell it for 50 euro per piece, then they earn less. But it's just a classic retail relation. So that are your three options if you want to go to the European market.
So just to make this summarize the options. So option one is go create your own entity, register for all the local taxes, VAT, and then if something happens, then it's on you. You are the owner of that entity. You could set it up as a subsidiary if you want, but either way, you are it. So that means that you need to meet all the requirements. Option number two is find somebody who is going to be agreeing to being the party to be responsible, be put on the packaging as the responsible party. Then they are responsible for any claims as well as any taxes or anything like that. But you are the one who is selling it. So you appear as the seller in that case, right? They are just the party who is responsible as far as all the red tape goes.
They are not responsible for the taxes. That's important to clarify. They will allow you to use their name to import the products. They will allow you that. They will test the product. They will want money for it, and they want a cut of each shipment. But then you still need to get the VAT stuff here in place, because as a non-European Union company, you can get a European Union VAT number, and then start selling here in Europe. And you are also allowed to import the goods, but you're not allowed to be liable for the product as long as you're not sitting in the European Union.
Okay, so the second option being having somebody to be the responsible party, you're still responsible for the tax payments, specifically VAT. We'll talk about that in a second. And the third option that you mentioned is you find somebody as your distributor, but that's a straightforward wholesale relationship. You'll be selling to them wholesale, right? Okay, so
yes, that's what I mean with it.
Yeah, I mean, that really is, of course, that's the easiest option. So you're just doing a sale, but then that means you need to have credit terms and things like that agreed with them. It's their responsibility to import and then sell. They can actually sell it on Amazon or anywhere else they want. All you're doing is you're doing wholesale. Okay,
and
so
you're not even allowed to forbid it to them. So if somebody can purchase a product somewhere, he also can sell it anywhere. So that's also some local speciality, I would say.
Yeah. So I want to look at the second option a little bit more. So there are companies in the Amazon partner network that provide services to offer some of these things. So what is your take on those companies that they fit into the second option, right?
Yes. So there are not many, and mostly they are specialized on specific product categories. For example, we know someone who is doing exactly what I'm talking about for supplements. Then you have somebody who's doing it especially for cosmetic products, and then you have also some generic, like I know one or two which do generic products, but in general they are specialized on some specific field, because the product compliance requirements are so high. And if you do like random everything, then you are less compliant, probably, most likely.
I see. Okay. All right.
Yes.
So what I want to dig a little bit further into is price. So when you get any one of these companies, who is the seller displayed on the Amazon listing? You or them?
So if you're talking about the generic systems, take number 2. So option number 2, you find someone, okay, then you're the seller. You're responsible for the VAT stuff, and you're also the importer, but you're not responsible for the product because you're not allowed to be.
Okay, so their only role is to take responsibility if something goes wrong.
Yes.
But you are the seller and you are responsible to decide what price you should sell it for.
Yes.
And when you make the sale, the settlement report that Amazon produces, the payment comes directly to you, right?
Yes.
It doesn't go
to
them.
They just allow you to use their address, nothing else. That's all what they do, nothing else.
Okay.
Just this.
So what I want to dig into is the VAT, because this is a foreign concept in America. So I lived in England, so I'm intimately familiar with it. So I can understand both systems and translate.
Yep.
So in America, there's something called sales tax. Sales tax is the cost of doing business if you're not buying something for resale purposes with a resale.
So B2C business.
Yeah. So if you are selling something, you're supposed to charge sales tax. And in America, people understand when they see a price on an item, that is the naked price of the item. It just is, and depending on where the item is being sold, the consumer understands there will be a sales tax being added on top of it. So if a business is buying that item, the business will then pay the item price plus sales tax. And then that sales tax for the business will become a cost.
Yeah.
There is no claiming it. There is nothing about it. It's just basically a cost of the item. That's how you regard it. In Europe, that is not the case. In Europe, VAT is exactly what VAT stands for, value added tax. In other words, something costs $100. First of all, this is the difference number one. When somebody sees the price of an item, $100, they automatically assume VAT included.
Yes.
So in your calculations, you have to make sure that you are adding that VAT on to your naked item price and then displaying the price accordingly. Otherwise, whatever you receive from Amazon, a big chunk of it will go to paying the taxes, and then you'll be out of pocket. And these VAT rates are not like in America, 6, 7, 8%. They are like 15% plus, right?
No. 19 minimum. In Germany is one of the, or has the lowest VAT rate with 19, and in Croatia, for example, you have 25. So 19 is the basic bottom line. And we had a funny positive surprise in the other direction, because we started selling in USA now for our customers, and when we do our margin calculation for German or for European companies, it's just always included that of course you need to get rid of the VAT first, but that's how they calculated the prices in the USA. And then we had this positive surprise, oh my god, there is no VAT, so this price is net already, so you can basically have much better margins. And that's how we realized, oh my god, this is a great opportunity to sell in the States. And a second thing, which is also super important to understand, the Amazon fees, the sales fees of 15% or whatever percent, they go in the States on the net, and in Europe on the gross. So you have also higher higher sales fees from Amazon, because they take a different base for their calculation.
So they apply their commissions
on the gross. Yeah, in Europe. Yeah.
That's unfair.
That
because you're not getting. Okay, so do they charge VAT on their fees?
Yeah, but as you're B2B, then you will get it basically back.
Okay,
so
that's
it's a bit different. It's a bit different. It's reverse charge, because they are in Luxembourg. Amazon is doing their VAT in Luxembourg, and you basically buy a service from a Luxembourg company. And if you have country, as in Europe, from one country to another one, a service invoice, then there is no money involved, you just need to balance it. But there you don't need to pay the VAT first and get it back later, if it's a service between two different countries.
Okay, so this is where I want to dig into it a little bit further. So, okay, let's make it simple. You made $100 sale on Amazon Germany.
Yeah.
That $100 will include $19, as you say, 19%. Let's assume.
Let's say 19, but it depends where you come from. If you come from the gross, then 90% of the gross is just 16%.
Yeah.
So from $100, you would have $16 VAT. That's gone.
Yeah. So just for the sake of example, let's say the naked price of an item is $100. And you're supposed to charge 19% VAT. So therefore, you will have 19%. You will have 19% added on top of it, and you will display your price as $119, right?
Yes.
So now, when the item is sold, you have received $119 gross.
Yes.
For the sale. $100 goes into your pocket. $19 you will pay over to the government as VAT that you collected.
Correct.
Except that's not accurate, is it? Because when you imported the products into the country, you paid the VAT upfront already, right?
Yeah. It depends on the country. To be honest, it depends on the country. In Germany, you have it like how you explain it. So, for example, if I import goods for 1 million, I will pay 190,000 to the government first and get it back later on. In some other countries like Netherlands, for example, or in UK, you have the postponed VAT scheme, and there you just balance it, so there is no money involved. So it also depends on the country where you do your import process. Plus, also one thing to add: everything you buy for a gross price, you always have to pay the gross price, and then you will balance it with your incomes. Basically, that's how the system in Europe works. So everybody knows that this money is anyhow just for the balance. You still need to flow the money over there and get it back from there, and then yeah. But that's Europe.
Yeah. So unlike in America, how things are in America. In America, you make a sale for $100, or I should say, you purchase something for $100. They will charge you an extra, I'm in New York, 8.75%. So I'm going to write a check for $108.75, and I'm going to put in my books as the cost of what I bought, $108.75. And I'm going to eat that extra $8.75 as the cost of being in the state that you are, where you made the purchase. In Europe, that's not how it works. You make a purchase for $100, or for this example, $119. You know that $19 that you paid is VAT.
Yeah.
And then you turn around and then you sell that item at $300.
Yeah.
You charge an additional 19%.
Yeah.
So 19% of $300 is $57.
Yeah.
So you price your item $357.
Yes.
And then you collect the $357. You made your $200 profit on the item. You put that in your pocket, and then you collected $57 in VAT. And then at the end of the month, you turn around to the government and you say, Mr. Government, I collected 57. But unlike America, you say, here, I'm going to write you a check, not for 57 that you collected, but 57 minus the 19 you paid when you purchased it. And then
that's correct.
You pay the balance. And that's what you were talking about. So when you are as an Amazon seller, so why is this important for Amazon sellers? So when Amazon sellers bring their products, either by option 1, set up their own corporation, or option 2, they have somebody else representing. It is their responsibility when the merchandise comes into the country to pay the VAT on the merchandise to the government upfront.
It's called yes, upfront. It's called import VAT, and you can apply for 4 weeks delay. So that's what you can do. So you can pay it 1 month later, but basically that's what you explain. And also important to understand, it's not the value of goods alone, it's the value of goods plus the cost of shipping. And on this value, that's like the base value, that's how you call it in German, Basis. So that's a base for the calculation. On this, you put 19%, and this 19% you send to the VAT collector, whatever. Yeah.
So if you are bringing a shipment of $10,000 and you pay $1,000 for freight to bring it in, so that means $11,000 is the value of your shipment, and the German government will say, okay, $11,000 times 19%, please give us your check either now or 4 weeks later. Nevertheless, that's what you have to pay. But that is not a cost to you, because you then turn around and then charge the end user. When you price your item, you price it accordingly, and then you collect and because you are there to make a profit, that's another conversation, but I'll get to in a second. Then if there is no profit that you are accumulating, you price it exactly the same price you're bringing it in, then you'll simply collect it from the consumer, and at the end of the month you'll say, I collected so much minus I already paid this much at the point of importation, and therefore you owe nothing. So this is not a cost, unlike America. I have to say,
but it's a cash flow.
America,
Yeah, but it's a cash flow disadvantage.
it's a cash flow. Yes, it's a cash flow question. Definitely you have to have it, but it's not a cost. I'd rather face a cash flow problem than a cost problem. Cost cannot go away, but cash flow you can deal with. Okay,
that's true.
So let's now discuss the pricing. So what is the standard, I should say, what is a best practice or common practice? Because if you are buying, let's say that this company that you set up is buying merchandise, it's a company, it's a business, it's supposed to make money. So do you make the import cost of the item same as the selling price so that the company doesn't generate any profits, or do you accumulate? So what is the best way?
So the best way is that you put all your costs in one spreadsheet and you see the VAT, you see the sales fee, so the commission for Amazon, you see the FBA fee, you can assume some kind of take cost, not a cost, total a cost. You check how much you have for returns, for example, so you can check your return value of USA to see some dimension at least. You need to figure out how much your pre-FBA might cost, and some other maybe you have some other problems with the product quality or whatever, or some default products. That's what you have to take into account, and then you have to check the absolute margin and the percentage margin, and this must satisfy you. And what I love to do afterwards, so you see the percent margin per unit, so basically the unit economics, and you see my product is sold for whatever and my margin is €5 and this is 25%, for example. That's a super healthy margin. 25-30% on Amazon. So on Amazon, that's important. 20 to 30, it's a good margin. What I love to do then is making a P&L. So there I check the cash flows, and there you see the impact on better or worse margins on your actual business project. Okay, and there you see numbers, because it always looks good when you check the unit economics, but just to give you an idea, we are doing that kind of potential analysis for some customers of us, and then financial planning and whatsoever, and it takes around 10 to 18, 20 months, maybe even more, to get the first time a positive result on your project, because as soon as you sold this products, you have to already order new ones in Asia, then you will have a cash outflow, and then you get a new cash inflow, and as soon as you are slightly going to the green direction, then you have to restock again, and so on and so forth. And if you have low margins, this can take really forever. So a tip for the audience here, strongly recommended, do a P&L, so profit and loss statement, and there you see when this project will be break even. And I think most are not doing that, or are not calculating it, and then they think they're making money, but actually they are not making money. They might make money in the future, they make just revenue, and that's what I would recommend to check this one in detail.
So this is such an important matter, and it is, most sellers don't understand it, don't even consider it, because it's
unfortunately
a complex. But you're not talking about really making money. What you're talking about is free cash flow, because you can be technically, you can be making money on which you will pay income tax. Because if you buy, I give you this very simple. You made a sale for $100 this month. Let's say you bought the item for $20, very good margin. You spent $20 on advertising. You spend $15 on Amazon commission. Take all those away, and you're left with $15 net profit, let's say, on $100 sale.
Yeah.
Now, at the end of the month, you sold $100 worth of, you generated revenue $100 worth, but the merchandise portion was $20. Well, guess what? You had to have $20 worth of stock in order to generate the $100 sales at the end of the month, right? So, and the chances are you didn't just order the $20 worth of merchandise. You placed a PO for generally 3 months worth, right? So that means you had $60 already invested in cash flow, in stock. By the end of the month, you still have $40 worth of merchandise left. But it doesn't matter because China is not going to wait for money. You already paid them probably 70% upfront when you placed the order. So you are already out of pocket $60. Then you made the $100 sale. Now, net value of the profit you generated that month is, let's say, $15. But you are already out of pocket with $60 worth of merchandise. You compensated $15 of it with the profit you generated. You're still out of pocket $45.
Yes.
Now the government is not going to say, oh, you are cash flow negative, so we're not going to charge you taxes. No, at the end of the month, I mean, usually this is at the end of the year because you're declaring your taxes. Your cash flow doesn't come into it. You're going to calculate your profit. So that's why I'm saying, technically, you are making money. But what you are referring to is the practical thing that people should consider, that is cash flow. And you are always running cash flow negative. And the higher the margins, the easier. The lower the margins, the longer before you see a penny, right?
And then more cash, then more revenue you generate, and the more sales you make, then more out of cash you are. So you need more cash if you sell more. It's insane, but seriously, guys, check the numbers and do it for your own business case. And as Nick said, I love your explanations, by the way. Perfectly explained. Margin, one thing, and shipping time, and or ship payment conditions. So that are your three options to improve that project, and really play the numbers game. Play around and then negotiate back with your supplier. Check maybe it's worth it to pay more for a product if you have 2 months less shipping time, for example, or better payment conditions. That's what you really need to check up front. And perfectly explained. I love it.
Yeah, the situation gets harder to deal with because you placed your PO for, like, take the same example, $60 worth of merchandise. You placed the PO. At the time you placed the PO, you have no merchandise, no nothing yet. You paid already 70% of it. And then by the time they ship, you pay the balance. Because usually that's how arrangements are. They want to be paid. They don't care when it arrives. If you can pull off a deal, it's even better. But let's assume you don't. So you are out of pocket $60 already. Plus, when it arrives in this European destination location, you have to pay another $19 on top for VAT, right? So now you are out of pocket
make any penny.
You are out of pocket 80. So it is, of course, you get that back as you make the sales because you're collecting the VAT back, but you are the one who has to finance. So this, to me, really, out of this whole conversation, there is nothing new here specific to European marketplace about your margin versus your cash flow dynamics. That's the case no matter where you are selling. However, it just becomes even harder to deal with. One more thing to consider in your cash flow calculations, because of the upfront VAT aspect. So tell me.
I have one.
Yeah.
Just one numbers example. I opened it on the second slide. So we have a pretty big customer which is assumed to generate $100,000 per month revenue. Okay, and with ordering a right product quantity so that he will not go out of stock and so on and so forth, he will have the first positive result in month 15. Month 15. 15, like 1-5, not 50, 1-5 in 1 month 15. So he's making a lot of revenue, but the revenue always goes directly to restock the products, and the margins are middle cool, so between 10 and 20% are the margins, and that's the biggest problem. If we raise the margins to 20, 25, 30%, then we will have a directly different result. That's why the margin is super important.
Yeah, 10-15% it makes it tough. And by the way, to achieve 10-15% net, it's still a pretty healthy operation. I would not consider, because 10-15% after everything is still healthy, but it just demonstrates how hard it is to turn cash flow positive. You could be making money, but you will be cash flow positive only months later. Something to keep in mind. So what I want to get into is, as far as your profitability. So I didn't get a clear answer. Where is the best place to accumulate the profit? So in other words, if you are selling an item for $100 direct to the consumer in the European marketplace, do you bring it in and charge yourself $100, or do you bring it in at a lower cost, therefore pay lower VAT on it, and then
it's illegal.
Make a profit?
It's illegal, because if you change this base value, you're not allowed to sell cheaper than you bought it. In general, of course, there are exceptions to this, but you're not allowed to do it. And the problem is, how would they find out? They will at some point. If you are successful, they will prove everything. They will check everything. They will check your bank accounts. When did you transfer how much money to your Chinese supplier, for example? How much products did you get? What was on the import invoice? Was it the right invoice? So they basically will check once every 3 to 5 years everything, and then you will pay more than you would save from the beginning. So that's not a recommended tactic.
Also, hold on, let me understand. So you're buying from China for $20, and you sell to the end user for $100.
Then you import it for $20 as you bought it in China, but not less than this.
You cannot import at a higher cost?
No, why? Then you would pay more VAT upfront. That's not
you would.
But
you wouldn't make profit. You wouldn't make profit in Germany. You would make profit wherever you are accumulating the profit.
That's how. Okay, so that is the question you have. Okay.
Yes.
Okay. That is smart. So for example, you have a North American company, and the North American company is buying the products, for example, for 20, and then they are selling the product for 40 to the European entity, and the European entity is importing it for 40. Then of course take all the profits out of Europe. That's for sure. That's just for sure. Have as low profits in Europe and pay tax on it as possible, because the taxes here are just higher.
You can do that too. You can do that.
That's possible. But you have like two companies then. Then you have like a European entity, and then you would have an American entity. I'm not like tax advisor or something. I'm not sure if you can do it with the same company, because you already bought it and you will just import because otherwise you would also cheat the import value. You know what I mean? So you can sell the products from one company to the other and take the second value as the import value. But if you already bought it as one company, you cannot import it for a different value to Europe. It's also illegal. in my understanding, because why should it be higher the price than you if you bought it? So there is no purchasing agreement in between.
Well, there are different business models. Like one of the business models I'm familiar with, they have these group buying offices. So the whole sole purpose of the company is to consolidate orders and then make one centralized purchase. And then they turn around and then they invoice the individual companies for their share of the purchase. So it's a legitimate way of doing business. It frankly focuses the purchasing, and you can increase your buying capacity by consolidating similar items. So there are business models like that. So it is understandable for another entity to be making the purchase, in this case, the parent company.
Exactly.
And then the parent company can invoice the subsidiary in Europe and therefore not accumulate any profits. You will pay a little bit higher VAT upfront, but you will avoid having to also declare income tax and everything else locally, the European. So
but
what is it?
Therefore, you need a second entity. That's important. You cannot do this model with just one entity, in my understanding. But with the second entity, as you said, that's super smart. That's super smart. You can do that kind of tricks even in between Europe. There was like a law gap, a tax law gap, that you had license fees in Belgium were not income tax related, something like that. So you did not have to pay license fee on the license fees you generate tax, but you had to you could make it as a cost in Germany, for example, your license fee. So you basically reduce the profits you generated in Germany by having a second subsidiary company in Belgium. It's like our neighbor country, but they did not pay income tax on this. And so you just basically printed money. So that's what you can even do in Europe. And especially with Switzerland, there are still a couple of models like that possible.
Yeah. So let's talk a little bit about the brand registry aspect of it. So how does the brand registry work? Is it registered in the name of this? If the brand is on the brand registry in the US, is it already done, or do you have to go through the same brand registry in Europe?
So you need for Europe another brand registration in the OIPO. That's European Intellectual Property Office. I guess that's the correct pronunciation, and therefore you need to register your brand in Europe as well, plus in UK, because UK is not part of the European Union anymore. So you would need to register the brand, but you could add this brand number to your American brand registry account. So you would not need to open a second brand registry account. You will just sum up your brands in the same account, and they can be like global. Just to give you one example, as UK was part of the European Union, the European brand was also valid in UK. After the Brexit, every brand which was registered for a European brand before the Brexit got automatically for free a UK brand. And you could see it. I didn't know it. I just saw it in our brand registry that we have a European brand and now a UK brand just for free. So you can sum it up in one brand registry, and that's pretty easy going, but you need to go through this registration once again.
Okay. So is there a way we talked about the first option where you go set up an entity. We talked about the second option where you find somebody just to put on your packaging. And then the third option is just wholesale deal. Is there like a fourth option where you kind of have a mix where you have somebody that facilitates all the transactions, and then at the same time, you don't have to deal with all the individual moving parts? Is there something like that?
Yeah, so I guess you're teasing our service, and maybe why I'm
explained it to me. You explained it to me, and I'd never heard about it. So it's a business model that it's not unique to you, so to speak, because others can do it, but I don't know anybody else doing this. And then you figured out, I guess, with your mechanical engineer mind. So share with us what it is that your model provides.
So we sell other companies' products through our Amazon account all over Europe plus UK. And as we are the seller of the product, we are also liable for VAT purposes for extended product responsibility. We did not talk about it at all, like packaging registration, electronic trash, all that kind of stuff, textile registration. So we have a couple like battery trash, and as we are the seller, we are liable for it, and we do it once and can sell it for a lower price to our customers. The only thing at the moment, just for the moment, what you need for this system is one VAT number, just one VAT number in somewhere in Europe. That's all. The rest is covered by us. We can be the responsible person, but we don't want to import the products. It's kind of a business model specific issue because we want to give our customers the full control of their success and of course the opposite of success. So it's then we make with this model, we make it as a commission-based model. Okay, that's why we need it. It would go way too deep, but in easy words, you need one VAT number. We still prove your product compliance. We still can import products in our name, but on your VAT number. And when you earn more, you actually get paid out more. When you earn less, you get paid out less. So that's in super easy words.
So you don't need to. So let's dissect this. First of all, I'm a seller in the US. I have my brand registry, and I don't need a seller account in Europe.
No,
it goes under your seller account. So everything that is sold, my products, they're under your seller account. My brand will still be my brand.
Yes.
But I will authorize you to sell my brand in the European marketplace.
Yes.
I will need my own VAT number.
Just one to sell all over Europe. That's a big difference. Just one number instead of 8 or 9 or 10 or whatever numbers.
Okay, one and what is the entity that will obtain that VAT number? Because it has to be a European entity, right? It cannot be a US entity.
That's what I said before. An American entity can get a European VAT number.
I see. Okay. So as the American entity I will obtain a European VAT number.
Yes.
Not individual to each marketplace. And then when I send the merchandise to you, I will pay the import VAT on it. It's still my responsibility, right?
Yes.
At that point, the merchandise is in.
Yes. Yes.
Building the listings and everything else. Who does that? Still I do that, right?
You can pick whatever you want. So we provide you our distribution network, our Amazon account. We do the Amazon account management, cases, all that stuff. And marketing is on our customer normally, but you can also say, guys, just do everything for me, and then we can also cover the marketing part.
Okay, I see.
But in the general service, we do compliance and account management and distribution and everything what is related to the inconvenient stuff.
Okay, so the most important thing to sellers is price control. So I assign the price, right? You don't have anything to do with it because you're not buying the merchandise.
We are actually buying the merchandise. Yes, we do. We do buy the merchandise. We do buy the merchandise which goes to the Amazon account. At the point when it arrives at the Amazon account, we buy the merchandise for some rough price, which is related to the payout we will generate like roughly, and we will pay you out for this. So you sell us a product for, let's say, €2, okay? Then we will pay you out €2. But when you make more than this €2, for example, after all PPC, after returns, after everything, and you make 50 cents more, so 250, then we will pay you out €2 for the invoice and also give you on top 50 cents for all this different for all the units. That's super unique. That's nobody does it like that, but it's proven by the VAT office or offices in Germany, and this is like the uniqueness in our business model, that we make a purchase business, so we buy the products but make it feel like a how you say it, commission business.
Yeah, it's
so
a revenue.
Like
it's a revenue share. You are doing a revenue share. So two questions there. Who sets the price of the item to the end user?
Yeah.
Are you deciding or am I deciding?
Physically, we have to do it because of the cartel law in Europe. Physically, we have to do it. That's why we work with our customers to be compliant, because compliance is a super important thing in our company, because everything must be compliant, because if we are not compliant, who else would be compliant? So that's why we work with recommended retail prices. We have a feature in our software, so that's what we did not talk at all about. We have a software where you see everything. You can control your PPC, you see your stock, you see your sales, and all where you had which costs, and so on and so forth. We have a feature in our software. It's called recommended retail price. You give us a new recommended retail price because we frame it like that. You are the expert which knows most about your product, most about the market. You can give us a recommended retail price through the software. We will get all the recommended retail prices into our system, and then we can just accept them.
Okay. So is there, I guess what I want to make sure is there is no situation where I want my price sold at €80 and you don't undercut and sell it for €60 or anything like that. The price is always according to what I want to assign to the item. Is that the case?
Legally, it's our
legally,
responsibility.
you have to set
it's
the
our
price.
Responsibility. And that's why we set the price, but we trust in the competence of our selling partners.
And selling partners dictate. Okay. And I heard you mention that technically you buy the merchandise. So
yes, we have to.
When you buy it, is this like a wholesale deal according to terms, or does it go according to when the payment comes out? So when do you actually make the payment for what you buy?
Yeah, let's go into detail. So we take a price which we think is realistic as a payout from Amazon minus all the costs. Okay, that is one document. That's we make an invoice. We make a credit note. It's a reverse invoice basically, so that we don't need to run behind the invoices. But that's what technically happens. You sell us the products for our purchase price, with what is roughly 30% of what's on Amazon in the end. Okay. This is one invoice. The payment terms, that's what you asked right now, is as soon as we sold it. Okay, so that's like the magic behind it. So you send us the products and we pay you out as soon as we sold it, twice a month. That's how it works.
Okay,
on the other side,
based on the settlement report. Yeah.
Yes. On the selling point. Yes. On the other side, we have a second document. It's an invoice item. There we sum up all the services, PPC costs, FBA costs, storage costs, and so on and so forth. And the third document, and that's the magic one, is the difference value. So you sold it for 2. If you would sell alone, you would have got 3, so we pay you out 2 plus €1 for what actually happened on the account.
Yeah. Okay.
It must be so complicated. Sorry that you for understanding. We would love to do commission. We would love to, but as we are selling internationally, we are not allowed to use the system internationally, because as soon as Amazon brings one product from France to Spain, we would need to do a commission between our Spanish VAT number and our French VAT number, and you know where this goes. If you have to do it with always when Amazon is moving a product from one country to the other, this model will not work practically. That's why we have to buy the products actually and make the commission model through this difference value.
Yeah. Yeah, well, so I mean, it looks like nothing with Amazon is simple, right? So everything is always complicated, and the devil is in the details. So it does sound like you created a fourth option. So
Yes.
this is very valuable for anybody who wants to expand into European markets, who doesn't want to create another entity, who doesn't want to look for a partner, who doesn't want to deal with all the stuff where they have to deal with now, where they accumulate profits, how they price, and then collect the VAT and declare all that stuff you're taking care of. Plus, you're facilitating the sale while they maintain control over their price.
Yeah. And it sounds maybe a bit complicated, but it's just an understanding thing. If you understood it once, you understood it, and then you will get 3 documents each month instead of for each B2C transaction. 1 document, because that's what normally would happen. Okay, normally you would send an invoice to every single end customer which bought your product. It can go into the thousands, 100,000s, and we accumulate them all and give you 3 invoices per month. So your bookkeeping is way easier, and you reduce the cost for VAT, consulting, for legal consulting, for all that stuff. And that's why I think, especially for non-European companies, it's a good option.
Yeah.
At least to start.
Yeah, exactly. I mean, because at the beginning, you want to minimize headache and costs.
Yeah.
It sounds like because you need to experiment. There's so much unknown in terms of, what will be your return on advertising, what is the best way to advertise, and all the creating the listings, a different language and regulations. So it sounds like it's something that will help. So tell us, how can people reach you and find out more about this?
Anton at SPACEGOATS.io is my email address. You can follow me on LinkedIn. We do some content over there. Anton Herman is my name. We have a YouTube channel. You can subscribe for this one. Maybe this one I'm asking here live. Nick will also attend our show once. And yeah, I think that's it. Anton at SPACEGOATS.io. Reach me on LinkedIn, on Facebook. Yeah, would love to hear your questions, and we
Great.
are happy to help.
This is valuable information. We've done a couple of episodes on international expansion, but we didn't really dig so much into it. So this was excellent. Thank you, Anton.
Thank you, Nick.
And this brings us to the end of another episode, and I'll see you on the next one.
Thank you for tuning in to today's episode. Be sure and subscribe, rate, and review our show. And be sure and share an episode with a friend. And thank you so much for being with us today. We'll see you next week here on Amazon Legends.